Hello everyone, today we are going to learn how to do a bank reconciliation. Remember, the bank reconciliation is done at the end of every month, and what we are trying to do is figure out how much cash we have. When we get our bank statement in the mail, the bank statement says we have a certain amount of money, but our general ledger account says that we have another amount of money. The purpose of the bank reconciliation then is to reconcile these two numbers and find out exactly how much cash we have. What we are going to do is draw an outline to help us facilitate the bank reconciliation. So the first thing we are going to do, we are going to write a cash balance as per bank statement, and then we are going to add something that, and we are going to subtract something that. Finally, you can get adjusted balance as per bank statement. Okay, now and down below that we are going to continue, but we are going to do it for company books. So we have a cash book, we have a cash balance as per cash book. Then we are going to add to something that, and we are going to subtract something, then finally you can get adjusted balance as per cash book. Okay, now this is for our general ledger. Okay, now we are going to looking at our bank statement. We are looking at our bank statement, and our bank statement shows that we have $2,000. We get some little example for identify process of the bank reconciliation. Okay, you focus for this process, and bank statement balance showing $2,000. If you look at our general ledger account, our general ledger is showing we don't have $2,000. It says that we have $1,800. So we need to reconcile these two numbers. If you're looking at our general ledger cash account, okay, we create a T ledger cash account. Okay, cash account. This is our general ledger. It's showing we have $1,800. So we are going to back to our bank statement, and we are looking at it. Our bank statement shows that we have a note that bank collected for us. Note of collected. Okay, now so bank collected a note from one of our customers. Instead of the customer sending us a check in the mail, it sent it directly to our bank, and the bank then deposit it to our account. And the note that was collected, the amount was $300. And we are going to add that to our general ledger cash account. The other thing that was on our bank statement, were two charges. The charge us and reduce our account. The first thing, the bank charge bank charge us for some monthly bank charges. bank charges. Those monthly bank charges were $50. So this is a little example, okay, and we are going to subtract those out. The other thing that was on the bank statement that we look at was the check one of our customer wrote us that bounced. The bank reduced our account that bounced check. This is called NSF check. NSF check. We think check by Mr. Pereira. Okay, it's called NSF check, and this is for now one of our customer, and check amount $350. So also subtract. So quite a bit of money that bounce. We are going to reduce our general ledger cash account by those two charges. We are going to reduce, and then also we are going to increase it a note of that collected from our one customer. If we add from $1,800 at $300, and we subtract these two charges, that gives an adjusted balance $1,700 in our books of 1,700 balance. So let's go up to back and top here. So let's go back to the top here and look at the same thing that might have affected bank statement balance. So one of thing, check use that we wrote that will not clear the bank. Outstanding check use. Outstanding check use that we wrote that not cleared the bank yet. We know we wrote them. We have already taken out of this number, but they haven't cleared the bank and want to subscribe those out. That bank statement balance, there's $400. We are subtract those out. The other thing that we know happened but is not included on the bank statement balance yet, it's a deposit we made, and that deposit may have been made like after 3 o'clock on the business day. The deposit will not show up until the following business day. So as of the date, okay, as of the date of this bank statement, the bank is not showing it including these numbers, and that was $100 deposit. Deposit transit $100. It's a deposit we made, and that deposit may have been made like after 3 o'clock on a business day. That deposit will not show up until the following business day. So as of the date of bank statement, bank is not showing it include this number, and that was $100. We are going to add that and bank statement balance. Okay, this is will give us adjusted balance as per bank statement $1,700. So $2,000 plus deposit transit $100 and less those outstanding check you gives us $1,700. Notice that both of these numbers match, and they have to match in order for us to show that we have reconciled our account. We really have 1,700, but right now in the cash you can see in the cash in our general ledger account is still showing $1,800. This is our exactly how much cash we have. Exactly we have $1,700. For the note that was collected. Okay, now you can see our cash book account balance $1,800 is showing. Okay, we need to make some adjustment, and we are going to make some adjustment. Okay, and for the note that was collected, we are going to make an adjustment for the bank charges. Okay, now we are going to make an adjustment for the NSF check written by the one of our customer, and we are going to general ledger, and we make up a journal page, we think date 4th April. Okay, let's say it was 30th April, and first one. Okay, journal page, and debit, credit. Okay, done. And the first one was note of that collected. So cash went up $300. So we are going to debit cash account $300. We are going to reduce our credit or not receivable account for relevant receivable account $300. Note of collected. Now we adjustment for cash account increase $300. Done. Okay, now so this was note of collected. We are recorded that $300, and when we post that, we debit our cash account. Okay, it's increasing our general ledger account. And next adjustment, we might need to take Skype it for these two subscriptions. So we Skype line. The first one is for the bank charges. Bank charges $50, and NSF check use NSF mean non-sufficient fund. Okay, NSF check use $350. Okay, and cash account credit $400. We cannot reduce bank charges and check bounced. Okay, we are going to ahead and call it bank charges expenses, service charges, and I'm going to call bank charges. Okay, bank charges is $50. And so also have NSF check you. We don't have an account called NSF check you. This is really a customer check use that bounced. Okay, bounce. That customer still owns us money. So we are going to debit our account receivable. We think sorry, this is not okay. Debit of receivables for Nimal, that was 300 Nimal with yes Nimal, so Nimal, Mr. Pereira, sorry, no Nimal, Mr. Pereira, within this bounce checkbook by Mr. Pereira. Okay, that customer still owes us money, we are going to debit our account receivable for Mr. Pereira is debit $350. Back check you, he still owes us the money, he want to make sure we debit his account receivable. Then we are going to reduce our cash account by these two numbers, $400. That's total $400, and we are going to go ahead and post this journal entry. Okay, and that reduce our general ledger cash account by relevant bank $400. That reduce our general ledger cash account by $400. After posting, then we should show correct adjustment balance, $250, and we can get adjustment balance $1,700. $1,700. Okay, and we are done with our bank reconciliation. Okay, today we are learn how to do reconcile the bank balance between cash book and passbook. Passbook same mean bank statement. This video forget idea about bank reconciliation and its journalizing, and we hope slow more question in exam past papers in next videos. Okay, stay with us and subscribe and click the bell icon for get notification for our new video tutorials, and like and comment and your idea and suggestions. Okay, thank you.